Hello, I'm Sier of Finextra and we're here at the Swift Business Forum, and today I'm with Sier of Kas Bank. Chris, to what extent do pension funds need data?
Well, they need lots of data. I think the trouble we have in the UK is we don't necessarily have a framework where they get the data that they need. In other jurisdictions, pension fund locations, domiciles, call it what you will, data is both readily available and expected, and in many cases demanded by the regulator. In the UK, the relationship between trustees and their understanding of the need for data is not as extensive as it could be. And I think the mission that we need to go on over the next few years is one where we educate them on how useful data can be to help them do their job properly.
Okay, and how much of this need for data is actually being driven by the regulators?
Well, in the UK, there's currently a consultation out by the FCA, specifically the FCA, not the pension fund regulator, but the Financial Conduct Authority, led by or generated by demands for greater transparency on costs. And this has been in the press a lot recently, where they are starting to structure a framework for collection of cost data. And it's a complicated discussion because in many cases pension funds not only realize how much things cost, but they don't even realize that the data that they need to collect to measure that cost is available, albeit in a complex form. So it's a complicated discussion.
Okay, and lastly, what's a solution that all parties can manage equally?
Well, the tensions that you have are the pension funds will have something mandated. They will have a framework placed on them. That framework is an uncomfortable one for providers to pension funds, asset managers, custodians, to live with. And it's uncomfortable for a couple of reasons. The first is they may not want to provide the data because they're conflicted in the provision of that data and it may challenge their business models. But also it can be difficult to collect. And currently in the UK where it's not collected, it means they have to reinvent the way in which they collect and aggregate that data. But there is a framework that exists. And that framework is a European framework. So in the Dutch markets, the Dutch regulator already has created a framework for data collection that exists within something called FTK, which is a reporting mechanism. And the onus of responsibility is placed on the pension funds to supply this data. Now, if the onus is placed on them, they are then placing the onus downstream on their asset managers and custodians. And these are the same asset managers and custodians that exist in the UK. In other words, if we take up this framework, or the regulator adopts this framework, the seeds have already been sown for the data to be collected. It means you don't have to reinvent anything. And what's more, the added advantage is you then get a European comparability. So in other words, you can compare between locations. And the final reason why it's really important is at some point the European legislation, the European Commission, is going to step in and mandate data standards. Well, what better way to convince them to adopt a standard is if two European regulatory domiciles have already collected data in a certain way, they're not going to invent something new. So in every way, adopting the Dutch standard is the right thing to do.